My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. In the next 600 seconds, I'm going to provide you guys with a quick update on markets such as Euro dollar and Bitcoin, crude oil, gold, and the DAX 30. So pretty much some of the most popular traded markets in the world. And if you're new to this is a presentation we host Monday to Friday here in the live trading room at 9 a.m. London time, or like today, slightly after 9 a.m., but usually at 9 a.m. Sharp. Good morning, hi, thanks so much for joining us in the chat. If anybody wants to join in the chat and say hello, then it's very straightforward. You just need to have a YouTube account. So you log in on YouTube and then you are able to ask questions, comment on videos, like videos, and partake here in the chat window. Okay, let's begin. And before we start, as always, I need to stress that trading financial markets unfortunately is risky, and it's a genuine risk that we'll lose all of our invested money. Click here on risk disclosure statement in the bottom of TradeCaptain.com to read more about it. Good morning, Antonio. I hope you're doing well, and everybody else that is watching, or maybe watching this in a few minutes or whatever it could be if you're looking at the replay. Okay, this is the euro versus the USD. Unfortunately, there's not much happening here. The market is moving to the upside. A few days ago, we said if we take out the 123.15 level, this market could head a little bit higher. But if I also remember correctly, I said that if you want to buy something, then you probably can look at, say, the pound dollar. And as well on TradeCaptain.com in the technical analysis section. I think it was already last week and early this week. I think it was last week actually. We did. So there's a bunch of different setups where you can take advantage of dollar strength or dollar weakness, but I don't think it's the best. But I don't think the euro dollar is the best way of taking advantage of dollar weakness. And the reason for that is because the overall market is trading sideways. So the only big level that is respecting right now is 121.55. And of course, you know, one can trade the short term here, as I explained yesterday as well, but short term levels in. So I remain bullish. The trend is bullish about 121.55. And if you want to trade this, you're probably better off trading it on a daily chart. So if it goes down here, one buys at 122.48, potentially hits the upside. In the short term, again, this is better things to trade. And just check out the technical analysis section and you can read more about the different markets I just mentioned there. So this is Bitcoin, and Bitcoin is stable at 6,850, and the market is trading sideways between well, it's actually bearish below 7,546 and bullish and it could technically just go lower, but it's trading sideways. And I think that's interesting because it could be potentially, this is typically what you see in a sort of reversal. Why? Because the market is getting tired of declining and it's down significantly from December 17th. The market is still down with about 65%. At one point it was down with 69. Could potentially make 185%. So I think that's really what's happening, but we're not out of the woods yet, and as long as you trade below 75.46, this market could easily just do something like this. However, I don't want to trade that move. It is possible to trade it, you know, goes up, one sells, stop on the other side, but I prefer the break here or the bullish break here. Here's crude oil, and crude oil reached our profit target. It was great. The idea was to buy down here around 63, 62.70. This is the original entry. We said if it goes down, we want to buy. We touched the buy zone on 4th of April, and then we touched it again on the 6th of April, and we never challenged the stop loss level. So the market bottomed out here. So here is really interesting because you see the risk, the effective risk was 90 or 100 So $1, but the market right now is at 262 pips or cents. So we effectively risked 100 cents to make 262 cents. That's a very good risk reward ratio. All the way to the high is 300, so that's 3 times your effective risk here. And what happens usually, you know, when I trade at least, is that you move the stop loss higher. So for example, say it would have just gone up here to, and then it would have tumbled and got us stopped out. Well, because I lowered my stop loss, I would have lost 100 pip. But what happens that many times we get these 300 pip return. So I can go and lose, I have 3 bad trades, but if I just make 1 good trade, I'm breaking even. So that's the sort of the power of the risk reward ratio. And sometimes of course the market just tumbles and we give up a lot. So for example, tumbles and we would have given up 274. That happens sometimes without, I mean, I know it for a fact. It happens all the time actually. But most of the time we can reduce the stops. Now this is a good opportunity to book profits, unless of course you're super bullish and I think they're going to take out the high. I'm leaning towards that because I think stock markets will continue to move to the upside and we can take out the high. But I think this is a well executed trade, and I'm just waiting for, I think it makes sense to book profits here. Again, I can trade sideways, and if we take out the high, it goes up and then down and then we can go along. But I prefer it goes down and then we just try to see if we can do what we did last time, which is just buy a dip and just be bullish above 61.71. So I would look for this to move to the downside and pretty much here, so close to 63.80. I would be assuming this market is going to try to bottom out. Here's the price of gold, and gold looks like the euro, so want to work with looking to buy at 1,316. Alternatively, just take out the high. Here's the DAX 30, and let's flip to a 4 hour. So this is a 4 hour, and I was bearish, as you know, but we took out my stop level, which was here, and the market tried to push a little bit higher. We're looking at this right now, and it's quite clear to me that if we take out 12,460, that this market could most likely have bottomed out at that time, at that point, and probably heads up a bit and then probably lower and then probably up like that. But for now though, it looks like it doesn't want to do that, and technically, I mean, it's not a good buy opportunity. If anything, it's an opportunity to sell. People sold here on March 16th and on March 13th. So this market could easily go down, but I wouldn't sell right now unless, you know, believe something bad is gonna happen, because we're dealing with a little short-term uptrend here, and I have a feeling we can go down and then up. And we have some issues in the world right now, and what is interesting is that we have the situation with the chemical attack in Syria, which could potentially escalate. The Russians in the UN Council vetoed an investigation to this latest event, and there's talk of potentially doing things outside of the UN. I think everybody knows that the UN is powerful in many aspects, but when it comes down to these sort of conflicts, there's always one side vetoing the other one. So, you know, there's no real work and happening, and there's always issues. So there's discussion now if, you know, maybe Donald Trump would, you know, ignore the UN and just work with NATO instead, which would alter the game quite in a major way. And who knows, maybe something over the weekend might happen, so we need to be very careful and mindful. And it wouldn't surprise me if we have news of, you know, missiles, rockets, whatever, and that could spook the markets a little bit. So we need to bear that in mind, especially because things like these can happen over the weekend. Then we have, of course, the U.S. sanctions against Russian oligarchs. I did an update on that yesterday. So this is the Russian ruble, and the market was trading nicely within its 2017 range, but in literally 2 days, the market wiped out its 2017 range. From the low here all the way up, it was almost 10%. The value of listed companies that are linked to these Russian oligarchs that are close to Putin decline. We even seen, if you just a prominent Russian firm or something like that, you would have seen some losses as well. So we'll see what happens, but maybe we'll have some sort of effect here, even though like the Russians don't necessarily are in a position to do too much. Worse, as we know, the Chinese, most of the stuff we buy come from China, so at least in the Western world, so they have much more sway. But in the case of the Russians, they don't have too much sway, unless of course they want to shut down like gas exports, which would definitely affect Europe. But then it's literally their primary source of income when exporting to the rest of the world. So it's very difficult. You close that, and then suddenly you start to have problems with fiscal deficits. So not sure. I don't think this is gonna escalate, but there's something that is happening and could potentially develop something. So that's something you need to pay attention to when trading stocks, when you're trading dollar yen or something like that, because we can have some sort of reaction. Okay. All right. So that was today's market update. Don't forget to check out the technical analysis section. We have several updates here, as you probably already know. I publish some stuff here on crude oil, but we have as well Yuri that posts several updates as well. He's not posting today, but he's gonna be back tomorrow and on Friday. Several of his ideas are absolutely great, and he follows again very similar setups with risk reward ratios. Here in fact is a setup on the DAX, and where he's actually the same levels that I am, so a break to the March high could potentially take things higher. So check it out, and if you have any questions or anything like that, or you want to know more about trade capital or amount of capital, let me know. We do have a premium section here which offers more content as well, so check that out. Have a good day, and I'll speak with you guys tomorrow. Thanks.